Hey everyone, welcome back to Fiscal Voyage, and I'm Felix. And in today's video, we're going to talk about my little shopping spree I did. I took advantage of the market crash on August 5th, Monday, a few days ago. And we're going to see the stocks I bought. We're going to see why I bought them. And I actually sold the stock and used that capital profit of the sold stock into buying more shares of another stock, and I'll show you why I did that as well. So let's get started with the video. So first off, let's look at the market. So on August 5th, you can see here the market had a huge gap down here on August 5th, Monday, but it actually had a gap down Friday before the weekend, and it had a big red day on Thursday here on August 1st. So if we calculate from this point, this high here, all the way to the bottom here, you can see the market dropped 8%. 8% in 3 days. That's pretty significant. You can see how big this is compared to, say, here or here, these pullbacks here, or even these pullbacks, because these are longer days, like 2 weeks here. This is 2 weeks. This is just 3 days, 8% drop. And then actually, if we go from the all-time high here, you can see it was a drop of almost 10%, 9.7% drop. So with that drop, I was like, oh, it's a perfect time to buy more shares of some stocks. So first off, let's look at my transactions. So we can see here in my Charles Schwab account, I sold shares of Southern Company, and I'll show you why. We're going to do that one first. I bought GPN, Global Payments. I bought OpenText. I own shares of these companies, so I added more shares to this company. In August 1st, I bought a few shares of MDT with dividends here, $600 of dividends. And I bought T-Roll on Monday. I used money that I sold from Southern Share to buy T-Roll. And then earlier today, I bought two shares of Target with dividends here, just $200 of shares, or 2 shares of Target. That's on my Charles Schwab account. And then on my Interactive Broker account, I bought MGA. I bought where is it here? I bought almost $2,000 worth of stock, which is 50 shares of it. And actually today I did an order. I bought Ulta Beauty. I bought 4 more shares of Ulta Beauty. Let me go back here. 4 shares, about $1,300. So that's all the transaction and shopping I did for this week. So first off, let's go to Southern. Why did I sell this stock? So you can see here, we're gonna go to the monthly chart. You can see here this stock had a nice little run up. So I sold it around 90 bucks. If we go back to my Schwab here, I sold it at 88.56. So 88.56, kind of like right here, almost at the top there. Now, that doesn't mean that the stock can go higher. It could go up to $100, who knows? But what I sold it is because it is extended and it's overvalued. Because if we go to fast graph here, you can see here, this stock is overvalued. You see here, that's overvalued. It has a 22 PE. This is the last time it had a 22 PE at $80 here in 2022, and then it dropped to $64. That's about a, what is that? That's a 20% drop in basically in 2 months. So that's why I sold. And over here too, 22 PE during COVID dropped. So I'm not expecting it to drop like that. That would be great. Then I could buy shares, back down here on $70 or so. I think it's a great company. You can see here how earnings just been very consistent growing. It's utility stock, A-rated credit score, very nice dividend yield. I've owned it for a long time. I think I bought it like around here, and I've owned it for a long time. And you can see here earnings are still expected to grow, but it's just overvalued. So we had the market correction, the drop on Monday, and a lot of stocks dropped as well. And this one went higher on Monday. So we go back to the chart here. You can see here Monday right here, Thursday, and then Monday it did a little, it did a red bar, but it opened and went up a little bit. I had an alert and it triggered the alert. So I was like, oh, let me sell the shares and buy something undervalued. So that's why I sold Southern Company. You can see here it's overvalued, and I like the company. I have an alert to buy more shares around the $70 range if it gets there, and I'll go back in. I definitely want to go back in. It's just I sold it because it's overvalued. So I used the proceed to buy TROW over here, and you can see why I bought it. You can see here I first bought it at $101, 34 shares, and I bought it because it's undervalued and it has a huge dividend, 4.73. I'm up a little bit there. My average is around $96, I think, because I owned shares before. So, and I didn't sell any when it was up here. I wish I did. And then I had a great opportunity to buy more shares here, but I didn't sell anything at this point. I just continued holding it. But that was a mistake, but I'm still up and I'm collecting the dividends. Earnings are expected to be up. You see 19% in 2024, flat in 2025 and 7% in 2026. So earnings to continue to go up. The dividends safely covered. The payout ratio is only 54%, so it's very well covered. And I bought it because it's undervalued. You can see here we can have an 18% annual rate of return for the next few years. Forecasting long-term growth, you see they're expecting around 7% in earnings growth. Long-term, we have one analyst expecting that. So I've owned the company for a long time, and I've always been happy with it. So that's why I bought shares. So if we go to the chart, you can see here, first off, if we go to the 3-month chart, you can see it's right at this 50 moving average, and you can see here how it bounced. And that moving average, it bounced here, it bounced here, and it's bounced here. It's going a lot of crazy here, but it bounced here. And that's what kind of I'm expecting, kind of like a continuation of bounce, because we have it undervalued and it's right at this 50 moving average on the 3-month chart. And if we look at the monthly chart, you can see here, it can go to $90, and I will be adding more shares at $90 because we have huge support at that range. So you can see here, boom, right there is huge support. We have support here, and support here. And if we go further back, you can see that was resistant here at this $90. So then we have strong resistance, then became support. So that's why I like $90. So I bought more shares here because it's still undervalued. And if it gets to $90, $85, I'm buying more shares, and that'll be the last time to buy shares. And at that point, I'll just hold it and wait and see if to maybe hopefully hit back up here. So that's why I bought shares of T-Rowe price. The next stock I bought is GPN, which is a processing, transaction processing company. Transaction payment processing service. So you can see here, first off, if we remove the price, this is beautiful. This is what I like to see every company doing. Earnings are always growing every year in, year out. They're expected to grow 12% in 2024, 13% in 2025, and 12% in 2026. So I like that a lot. So then you see the price here, and this stock is extremely undervalued for what is growing, expected to grow. Double-digit growth with a PE of 9%, or a PE of 9. That's tremendous. So this is why I bought shares of this company, and they had a great day today, and I bought it at over here. Where is it? I bought more shares at $93. So right now it's at 104. I'm up, maybe like 6% or 5% overall, because I bought shares around like $100. So I'm not up huge because I've been buying shares. I think I bought my first shares around this area, and then I just held it, and then it dropped again. So I bought more shares because nothing really changed. The price changed, but the stock is still expected to go higher. And if we go to forecasting, you can see here, they're expected 11.5% growth going forward, 6th analyst. So I'm buying shares. And we go to the chart, JPN. Here you can see here, this is beautiful, right at the 3-month 50 moving average right here. It looks like a double bottom. We had buyers here, took it higher, a huge red candle there, and then now we're expecting buyers to take us back up. So that's what I'm expecting with this stock, and this is why I bought shares of Global Payments. You can see here bottoming tail, and you can see here they had earnings here on the 7th, and they had two big days on the 7th. On earnings day, they had a huge green day, and then the next day, today, they had a green day. So I'm expecting it to continue to go higher because it's undervalued, right at the moving averages. So everything checks. The next stock I bought was OTX. You can see here OTX, another undervalued stock. This is a Canadian company, but it's still undervalued. You can see here earnings are expected to be down 30% for 2025, but pick up in 2026 and 2027. Is a double B plus credit rating, so it's not high quality credit rating, but they have cash. If we go to the free cash flow, you can see here it covers the dividends very nicely. They actually increased the dividend 5% a few weeks ago, or last week when they reported earnings. But you can see here, this is why I bought shares of this company. It's undervalued, forecasting long-term growth. You can see here 9%. You can see how undervalued with a 7 PE this stock is. And if we go to the chart, what's the symbol here? OTX. So if we go to the chart here for this stock, you can see here again, right at the 200 moving average on the monthly chart on the bottom left. Let me make this bigger. Right in there, you see strong support here around $25. Strong support here again around $25. So that's why I bought shares of this stock. And you can see here earnings, they had a drop on Friday, and then on Monday is when I bought shares, because it was right at this point here, right at this support area, because it was a nice green bar that took it higher. So I think there's strong buyers at this 27.50 area, so that's why I bought shares. So it's been up since then. Doesn't mean it's not gonna come back down, but overall, if we go back to the monthly, we had a nice bounce here on the 200, and that kind of expecting the same thing because it's undervalued and right at the monthly 200 moving average. So the next stock, South Government, we did those, okay. And then Magnum, which I bought, MGA, Magnin International. You can see here, there's another undervalued stock. So it is on the downtrend still, but earnings, once they report, I think the next 2 quarters or 3 quarters, this should start picking up because this is an automotive parts and equipment company. It has a A- credit rating, so it's a solid credit score, and is a Canadian company. And the dividend is very nice, almost 5%. Earnings yield 13.94. I like to see it at 6.5 or higher, so that's great. And long-term growth, you can see here they're expecting about 11% growth. So once the I think once interest rate starts to get cut, this stock is going to be one of those that's going to take advantage of that and just go higher. If we go to the chart, MGA, and you can see here, I bought shares because right there, boom, this is the COVID time. It bounced in the monthly 200 moving average, and I'm kind of expecting the same thing, a bounce in the monthly 200 moving average. You see here, it bounced here. Now, obviously, during 2008, 2009, it passed it. It had resistance here. You can see how it brought it down, but then it came back up. It hit it there, it hit it here, and I kind of expect kind of the same thing, hit over here around $40 and take it right back up because it's undervalued stock. So that's why I bought shares of this company. So those are the reasons why I did a little shopping spree. I'm not gonna go over the few other stocks that I bought, MDT and Target. And Ulta, I do that one. Let's see, Ulta, why I bought Ulta Beauty. You can see here another undervalued stock. It has a 12 PE with double-digit earnings growth expected, and it's in the beauty sector. Anyone who has a wife or girlfriend or understand woman knows that they use a lot of makeup and beauty product, and is a consumable product. And it's kind of like a necessity nowadays worldwide. Every female use makeup, and I want to be in that business. I think it's a great business, and that's why I bought shares of this stock. If we go to the chart here, You can see here, it has room to go lower. You can see it can go up to 250 here on the moving average on the 3-month, and the $200 on the 200 monthly moving average. So it has room to go lower, but I think it doesn't because it's just is undervalued. Analysts forecasting or expecting 6.5% growth. It doesn't pay a dividend, but I think it's undervalued at current price with a great PE of 12.6. So that's why I bought shares. So you have it there. Thank you guys for watching, and I'll see you guys in the next one. Make sure you hit like and subscribe for the next video.